So we have to both report the payroll taxes and pay the payroll taxes, right? It's not our money, belongs to, well, kind of belongs jointly to the employee and the IRS. Employer is just holding it in trust. So they have to remit these payments, the amounts that were withheld, and then they have to file tax returns to report the amount that should have been withheld, and it'll be reconciled with the amount that was withheld. And those reports are due 4 times a year. So, paying the payroll taxes. Remember, the more you owe, the faster the IRS wants their money. So if you don't owe them very much money, they're not going to be on your case to pay it to them very fast. They still want it, but they can wait a little while. So if the total amount of payroll taxes that are due are less than, I think it's $2,500. I'd have to look exactly. I can't remember the exact number. You only have to pay them once a year. I think it's $1,000. You only have to pay them once a year. And you pay them by January 31st. That doesn't happen very often. Usually, not very many employers would actually meet that criteria. And you would pay it at the same time that you file the report, if it's that low. The next level up are companies that owe, what is it? It's, this is the one that's $2,500. How much is it? Why can't I remember this off the top of my head? If you think of something else, it's okay. There it is. Okay, so less than $1,000 you can pay it once a year. Between $1,000, let me write this down. So you'd use a form 944, pay once a year. If you owe between 1,001 to 2,500, you use the form 941 and you pay quarterly. And you pay it with the 941. Okay, and this one is due, so this one's due January 31st of the following year. This is due by the last day of the month following the quarter end. So, for example, first quarter is January, February, March. Last day of the month following the quarter end would be April 30th. That would be due. It would be due with the 941. If you owe between 2,501, let's see, what is it? Up to, they don't have the, I can't remember these cutoffs. And they don't have them in order in this book. Like they put the lowest one to the highest amount due. Let's see, sorry. The next one is monthly. All right. So the monthly is, with the monthly, they use this look back period. And if you owed less than $50,000 during the look back period, then you pay monthly. Okay, so erase this. So less than you're going to use the form 941, but you're going to pay this monthly. So now you've got the form 941 is paid on is filed on a quarterly basis. So now you've got two different schedules. You're going to file the 941 on a quarterly basis, but you're going to pay monthly the 15th day of month following month end. Okay, so that's if you owed less than 50,000 in the look back period, but you owed more than 2,500 in the last quarter. Then you are a monthly scheduled depositor. The next one is the form 941. If you owed more than 50,000 in the look back period, you're still going to use the 941 and you're going to file it quarterly, but this one is called a semi-weekly depositor. This one's a little confusing. If you recall, semi-weekly does not mean that the employer pays twice a week. It means that the IRS receives payments on 2 days during the week, or twice per week. So, this one depends upon when your payday is. So if payday is on Wednesday, Thursday, Friday, then you deposit, is it following Wednesday? Yeah. Following Wednesday. If your payday is Saturday through Tuesday, then you deposit following Friday. Okay, so if your payday is, what is today? Today's Thursday, say we got payday today and we are a semi-weekly depositor. So we have to make the deposit for all of the amounts that we've withheld by next Wednesday. If we paid on Monday of this week, we'd have to make that deposit by tomorrow. Okay. Again, the more you owe, the faster they want their money. Now, on any particular pay period where it's 100,000 or more, again, you file it on the form 941. But this is next day. Next day deposit. Now, it's possible to be a monthly payroll depositor, but then have a payroll where your liability, your payroll tax liability, is over $100,000. Think about bonuses. So if an employer pays out big bonuses at the end of the year, and that generates a payroll tax liability of over $100,000, then in that one pay period, they're gonna have to make the deposit the next day, the next business day. So if there's a weekend, and this is true of any of these, if there's a weekend or a holiday on that day, then it's the next business day. So if we paid on Monday, and we're a semi-weekly depositor, and let's say tomorrow is a holiday, well, tomorrow is a holiday, isn't it? Veterans Day. All right, and tomorrow is a holiday. That means we don't have to make that deposit by tomorrow, we have to make it by next Monday. Okay, forgot that was a holiday. Now, the forms, Form 944 is annual. You file it annually, once a year, also by January 31st. Form 941 is quarterly. And it's due by the last day of the month following the quarter end. Okay. So if you are a monthly payroll depositor, you're depositing by the 15th day of the following month, but then every third month, fourth month, whatever, every quarter, you're also going to make a deposit, and then by the end of the month, you've got to file your 941. So you get kind of two different schedules. The only one that's on the same schedule is anybody who does the annual payment or the quarterly payment. Then they would file it with the form. Everybody else files the form at a different time from when they actually make the payment. Kind of like withholding, right? The 941 and the 944 act kind of like a 1040. It's a reconciliation. It's a reporting form. How much do you actually owe? And then the deposits are how much you actually paid, and then you reconcile those two. Now, unlike the 1040, the 941s, usually you should end up at even, break even. Doesn't always happen, but that's what does happen. Questions about the schedule? Penalties, I'll let you read all these. So there are penalties for late deposits, there are penalties for late filings, there are penalties for no deposits, there are penalties for no filing, and the penalty, again, it's all about the timing. The later you are, the higher the penalty is. So it goes up as you are later and later and later. And then they'll also start tapping on interest. So the 941, let's see, so this is what a 941 looks like. These are filed quarterly. And it indicates up here in the upper right which quarter you're filing for. You guys should remember these. You indicate the number of employees you had during the pay period that includes this particular date. The total amount of wages, tips, and other compensation, this would be federally, those wages that are subject to federal income tax would be listed here. Federal income tax withholding. I'm sorry, is somebody going to ask a question? No? Okay. Line 3 is the amount of federal income taxes during that quarter that have been withheld. And then Social Security wages that are subject to Social Security and Medicare tax, listed down here. You add all the wages, you add up all the Social Security Medicare tax liability for the quarter, and then you add together the Social Security Medicare tax and the federal income taxes, which equals the amount that is due. I don't know if you have any problems that involve fractions of cents. You guys remember fractions of cents, what that's for? When you have,
I used to struggle.
yeah, that's the biggest, that's the thing that fractions of cents. So weird things happen when you're working with percentages. You know, you get this whole rounding issue. And when you're making deposits, you are calculating Social Security and Medicare tax on a per pay basis, probably, right? Unless you're one of the, you know, you don't have to pay very often. But so here you're paying this monthly. And if your pay frequency is, let's say your pay frequency is weekly, so you're calculating the amount of Social Security and Medicare tax on a weekly basis for each employee, and then you're adding it all up each week. And then at the end of the month or quarter or whatever, you add all of that up. Well, on the form, you're calculating it for the whole quarter. So weird things happen when you multiply by percentages and you're using weeks on the one hand and then trying to match it to an entire quarter's worth of information, right? You'll get differences, little differences. Shouldn't be too much. If it's more than about 25 cents, you probably have a problem. But it's due to rounding differences because you're calculating that amount using two different methods. So that's what the fractions of cents are. If the reason that your deposits don't equal the amount that you owe is because of rounding differences, then you make an adjustment to the amount you owe. Okay, you just adjust it to whatever it was that you paid, either up or down. They're not worried about a couple pennies here or there. So like I said, if that amount in there is more than about 25 cents, you probably have some other problem, some mathematical problem. All right, and then you match it with what you paid, and that's it. This is the Schedule B. So if you are a semi-weekly scheduled depositor, so you had more than $50,000 liability in the look-back period, or you owed $100,000 or more on any one pay period, you would fill out Schedule B. This is indicating you enter in the amount of tax liability on the day that you incurred the liability. So this is the payday. This is not the day you made the payment. This is the payday. The IRS wants to know, is using this information to determine if you were late. They already know when you paid it. They've got that, because they got your money. They want to know when you owed it. And that's what you're indicating here is, okay, so I owed, so they had a pay period probably on the 15th and the last day of the month. So this is the liability. If they were supposed to pay by, say, the 20th and they didn't, they actually paid on the 21st, bang, then the IRS is going to issue a penalty, an assessment penalty. Okay? Questions? That's a lot of information. And I'm going through it pretty fast. All right. God, they just jam everything